ICT. Why is it so popular? Why does everyone want to learn it, especially newcomers into the market, even experienced traders? I mean, a lot of people have came from like pattern recognition, technical analysis, came over to ICT. So in this video, I'm going to explain to you why ICT is such a popular strategy, why it's so well known in the industry, and whether you're a new trader or you're experienced, this is the right video for you. We're going to get right into the video as to why and what ICT actually is. Before we even get into the example on the charts, I just want to draw a little square over here. So ICT, the name ICT stands for inner circle trading. Because for example, say you're a swing trader, you trade on the daily time frame and you trade for multiple days. Well, once you have that strategy, you are stuck to your time frame. It's not like you can jump down to the 1 minute time frame. No. You're stuck to that daily time frame because that's where your strategy works. For ICT, our strategies, they work on any time frame. They work from the 1 day to the 4 hour to the 3 hour to the 1 hour. So automatically, say right here, this bigger square is the 4 hour time frame. This is the 1 hour time frame. This is the 15-minute time frame. This is the 1 minute time frame. Every single time you zoom in, your strategy is just going to be shown more and more. So for example, say this is the 5 minute time frame. What's the first thing we see over here? Well, we have an SMT divergence. Well, that's one indication as to why we might want to move up. But of course, you can't just base a strategy just on that. And of course, if you are new to these videos, this is NAS and ES. These are my two favorite pairs. I always trade daily. So now we have a sell side over here on NAS. We don't actually have a sell side yet. So maybe we're going to take the sell side, maybe we're not. Let's see. But we have this SMT, so there is a reason for us to push higher. But of course, we need more confluence. So come to the 4 hour time frame. What do we see over here? Well, we are in a fair value gap. What's a fair value gap? It's an inefficiency in a market created by three candles that have a gap in the middle between the wicks. So once we draw that out, oftentimes market want to always retrace to rebalance those inefficiencies to then push higher, or we can push lower and make an inversion gap. So possibilities either way. So we have this 4 hour fair value gap. So that's another confluence as to maybe why we want to retest and jump back upwards. Come to the 1 hour. What do we see? We have another fair value gap. So you see, aligning the time frames. That's what ICT is. You align the time frames. Go from top-down analysis. And every single time frame that you zoom in, there's always going to be an ICT model to present itself, as what I'm doing right now. So that's the 1 hour. We have another fair value gap as we just had for the 4 hour. Come to the 15. What do we have? Another fair value gap. And right here, we have two fair value gaps. You can always pair them. I usually like to pair them. So as you can see, it could get a little messy, but for the reason for this video, I'm just stacking on stacking models just for this simple indication. Again, 5 minute fair value gap again. Now, these are a lot of fair value gaps, I'm gonna admit. So we have that sell side and we have that SMT. Now, what do we want to do? Come down to the 1 minute. Let's see. Are we gonna have maybe an entry model? Let's see. Well, right here, we can see this as a sweep of liquidity. Not really the best sweep. And then this could be our market structure break right up here. But I'm not crazy about it. So let's see. Are we going to end up pushing higher? There we go. So we ended up taking out this high over here. Now, this would not be a bad buying opportunity. So let's just jump in a bit over here. And let's go with the trend a bit. So as you can see, we'll just cash out over here. Why not? Not really trying to like make money on this. I just want to show you how ICT works. So automatically, you can see generated sell side that we do want to continue higher and take out these previous low resting liquidity. So ICT, it's pretty much just stacking models on top of models. Now, for example, if you were to want to hold this trade longer, well, you can continue holding until we get into that fair value gap. Because why? That fair value gap, as I said, resting liquidity, we bounce off it and we could reject down. So, bro, It's honestly as simple as that. Once you understand the concepts of like fair value gap, SMT, sell side liquidity, change of a state, inversion for value gap, well, there's so many. Equilibrium of the price range. It's you just pair it all together. I mean, right here, this is equilibrium of the price range. From here to here, this strong move. Where did we go? Right to the 0.5. What can we expect now? Maybe a rejection lower. It's honestly that easy. Once you have these little, think of them as like little milestones. Every single time you catch one stone, there's another stone. So you have fair value gap, the SMT. Pair it together, you have a model. You can create your own model. I mean, my model is simply right here. You have a fair value gap, sell side, SMT. Look for a change of a state, inversion for value gap. You enter, take a long, and that's your entry. So I hope you understood what this video is all about. If you did, leave a like, subscribe, and down below I do have a link to my Discord. It's free. I'm not charging anything. It's just a little community where we all chill out. During New York session, we talk, share our strategies, and yeah. If you did like the video, like, subscribe, and I'll see you next time.